In other news, the Bitcoin bill, Bitcoin, no. In other news, the Bitcoin bull ruin is on. That's right. The Bitcoin bull ruin is coming to get you if you're not careful with your trades. If you're over leveraging your positions, you're likely to get wrecked. If you don't take profits and you just sit around and try to swing trade, you're likely to lose your trades. And if you're leveraged, you're likely to get wrecked. Many people, in fact, lose a lot of money when the market's going up and they think they're being smart and they don't take their profits and they enter a leveraged position, and after the asset is distributed very nicely, it mean reverts because that's what returns do, and then the price action follows. And very, very often we see, even in what people call bull markets, that positions that seemed like a safe trade actually were very risky. And that risk was brought on by the fact that people had too high of a leverage position. Yeah, so what was I saying? Oh, yeah, over leveraged positions. That's typically how people get wrecked, even when they're longing in a bull market or when they're shorting, trying to catch a quick scalp to the downside when they think it's going to mean revert, but much more than it actually is, because they're basing their concept of mean reversion on price, which has nothing to do with mean reversion when it comes to trading. It's not the price that mean reverts, it's the returns. And that means that the price just follows it, however long it does. Right? So once the asset has mean reverted, that's usually time to take your profit. Unless you think it's going to continue going in that direction for somewhere, for some distance, which obviously it could, because you could have, for example, if things were going to the upside and then you mean reverted and it went to, and it mean reverted to the downside, maybe it'll continue mean reverting further than the mean. Maybe it'll distribute past the mean and go to the downside before finding buy pressure and mean reverting to the upside. Right? So you can, in theory, stay in those trades if the VEPS indication is indicating that indeed it's likely to continue to past the mean and basically begin to distribute negative returns below the mean. Now, that means that people are losing when they're shorting in up markets or when they're longing in up markets, and the same happens in bear markets, right? What people call bear markets, which is just extended periods of sell pressure. How can you avoid getting wrecked? How can you avoid getting ruined in the bull run, right? How can you make sure rather that your trading doesn't end up on the bull ruin table and ends up on the successful bull run table? Well, if you trade low time frame volatility, entropy, probabilities, and statistics, you are more probable, you have a higher degree of certainty, higher degree of confidence, lower degree of uncertainty that your trade will be a winning trade. And when you do that consistently, and you're taking multiple trades a day on low time frames, then your overall percentage average should be consistently profitable. Now, the idea here is not to try to get 100% move on a trade. The idea, when it comes to scalping or trading low time frames, is to get relatively small moves. You're not looking for that big, massive win that's going to make you an overnight millionaire. It's not how it's done. If you want to do that, that's called gambling, right? That's a whole different thing. Trading is about making smart decisions to buy and to sell, to buy low and sell high with frequent repetition so that you stack. Over time, stacking adds up, and it usually adds up to more than just one big windfall. I'm not saying anything wrong with one big windfall. If you got it, great, good for you. God bless. It's wonderful. Hope it's life-changing and you use it in a good way and you're smart and wise about your success. I'm talking about if you actually want to be a trader consistently, right, on a regular day in, day out basis, some number of days a week, whether that's a retail trader or if you're interested in becoming a professional trader at one of those professional firms where you need to usually have a pretty solid set of qualifications just to be considered, and you cannot just enter the market freely because you are ultimately trading with other people's money. And in order for them to trust you with their money, they need to see that you're qualified. So they're going to need to know that you know about standard deviations, about Laplace distributions, about means and returns, and even entropy. The leading firms will certainly ask you about that. You're going to need to know that you know about probabilities and statistics. There's no getting around that. Right? It's just essentially par for the course if you actually want to trade at a professional bucket shop, right? Or even a very big and fancy and well-established firm. The reason that it's easier, obviously, to get into retail is none of those qualifications are really required because you're working for yourself. What is required is that you actually know what you're doing and that you actually make sure you're only trading when you know how. And you do that by learning how to trade the VEPs before you actually trade. And you do that by getting the free volatility starter pack of indicators from Alpha Trading at the Alpha Trading Discord, which is at alphatradinghq.com/discord. Again, that's alphatradinghq.com/discord. And then you go into the request support channel, click the create a ticket button, and say you want the free access to the volatility starter pack. And then you just mention your TradingView username so we can hook you up with those indicators and the chart and the educational material and access to the chats and access to the live streams and everything else you can think of that you might need to learn how to trade the basics of volatility, probabilities, and statistics. And once you've actually done that, right, then once you've actually learned what those tendencies are, and grab our cheat sheet so you can see what those tendencies are at a glance, then you can actually run virtual trades. If you go onto a crypto exchange, for example, they will often give you a virtual account if you want to use it. Binance has one, but there's an issue with some of their charts not being synchronized well with TradingView. Bybit, I know, has one. Last time I checked, its charts were synchronized well. Deribit also, and there are others. It also will give you free virtual account fake money to practice with, and that lets you put the indicators and the knowledge you've learned to the test to see if indeed your trades are going to go the way you expect. And once you've actually demonstrated to yourself that you can actually trade with those tools and with that knowledge, then by all means, it's up to you to decide if and when you want to run real trades. And when you do, then you'll see what your win and loss record is and what your percentage of gains or losses is. And you should, of course, not use leverage, right? Especially when you're starting out. And you should trade assets you can actually afford, multiple units of, preferably, so that you don't miss out on the gains by earning only a tiny fraction of them. And then, once you've done that sufficiently, and you see that you're okay or good or great at trading with the VEPs, then you can try, if you want, our free 2-week trial of our Pro Trader indicators to see if indeed you should upgrade to our Pro Trader account. You try them out for free for 2 weeks first, and by the time you do, it should be a no-brainer. If it's not a no-brainer, right, you haven't really learned the basics yet. So really, you should learn the basics well enough before you try the free trial. Trust me, it's worth it, because that way you don't just try the free trial and fail miserably and then disappear and go back to your old bad ways of trading with lagging info. Learn the right way of trading, learn a better way of trading using the VEPS indicators. Use the free tools at your disposal first. The whole community exists specifically to help you learn for free. And we look forward to seeing you in the Discord and in the live streams that start at 9 a.m. U.S. Eastern Time, Monday through Friday. So jump on in, and it's also on Rumble, but jump on into the Discord and into the live streams. Ask any questions you have by text or by voice. The whole point is an educational live stream for you to learn. Ask any chart you want to see. We'll probably pull up if it has a decent history. We can see decent information about it, then we'll definitely chart it. If it has no history, well then we're not going to chart garbage or things that are just too new. Even if they're not garbage, they're just too new to properly look at. All right, that's going to do it for now. And to the next one, happy trading. Cheers.